Welcome to the future of payroll and workforce management insights by HR.com, your go-to resource for insights into payroll and workforce management. From navigating compliance and technology trends to exploring the latest in global payroll solutions, we're here to keep you ahead of the curve. Join us as we dive into the forces reshaping payroll and share practical strategies to optimize your workforce management. Let's get started. Well, hello everyone, and welcome to the latest episode of Future of Payroll and Workforce Management, a podcast here at HR.com where I am your host. My name is Brent Skinner. I do all sorts of things here, but enough about me. This is about my guest. Hello, Tom. Welcome to the podcast.
Hey there, very excited to be here.
Oh yeah, and that makes two of us. You are Tom Bachar, and you are founder and CEO of Streamfunds Incorporated. And you and I spoke a couple of weeks ago or so. I think it was just a couple of weeks, but anyway, we got to talking about earned wage access and your application that you had, your app for your mobile app, I think it is for your
Correct.
company, and all this kind of stuff. Yeah, and it's super duper interesting. And EWA is huge right now, and we're going to be diving deep into that. But first, as I like to ask all my guests, there's a lot of passion in this space, a lot of, like ambition and drive in this space, the world of work, especially in paying people, getting people paid right and on time and when they need it. Um, and I'm sure you have a bit of a story there for yourself, Tom. Maybe you could share with our audience, what makes you tick, what galvanizes you, what gets you going every day?
Yeah, so I've actually been in the space for quite a while, and I've seen the problem from a multitude of perspectives, starting very early in the space with just a passion for computers and finance and finding that intersection. One of the kind of pulling points for me was seeing that a lot of technology was evolving, but most of personal finance was not. We were seeing small things like Venmo, where it was getting easier to pay people, but the tools that actually allowed people to save was rather cumbersome still. And so I actually started another company prior to this called Pay. It was in the saving space. What we did was we provided cash back from retailers. The thought at that point in time was, why don't we find ways to have retailers pay cash back directly to the consumers that shop there, who then become loyal customers thereafter, who help to evangelize those businesses. And it very quickly saw a lot of traction. We had hundreds of thousands of retailers across the country that supported this. And eventually the company landed a buy now, pay later company. And from there on, I got to see a lot of the perspective of just how much financing was actually happening on a consumer level, and where the real struggles were coming from. A lot of the times, which I'm excited to talk about today, is it's not necessarily a finance issue, meaning people don't make enough or they just don't have enough. It's a lot of a timing issue, meaning emergency expenses that come up at very unfortunate times where paychecks haven't yet hit and you've already budgeted out, but yet this new emergency expense kind of takes you out. A lot of that is really the core issue, the crux of it. And so when my team and I kind of came into space originally, having kind of worked at Capital One, having worked at this buy now, pay later company, we really realized that at first, why don't we just build a better experience was really the first thing that we were seeking out to do. And then we found that was really just base level, table stakes at this point. A lot of other players really do very little to make a proper experience for their users. A lot of it, and hopefully we'll talk about it, is very Payday-esque and less actual benefit. And so from there, it just kind of kept spinning of there's opportunities to continue to build this product into what our users properly expect it to be, and less of kind of a mask of Payday. So yeah, we've been now doing this for 2 years. It's been an incredibly gratifying experience and an incredibly fun experience, but it's such an interesting space that's truly evolving very quickly right now, and excited to talk more about it.
Yeah, that's a great story, by the way. And buy now, pay later (BNPL). When that first came out a few years ago, I think it was about 5 or so years ago when it really became sort of a thing. Um, Honestly, I was blown away. I was like, wow, we can actually do that now right on the spot. That's not, I won't tell you what decade I grew up in, but let's just say that it was not really an option back then. Um, we had computers. I don't know if we had a computer, but anyway, there were computers. In any event, um, that's a great tee up too to what we're going to be talking about today, and that is earned wage access. Getting I've most of it that we've kind of landed on this term earned wage access, which is I was actually thinking about this podcast earlier today that we're going to record right now. I thought, gosh, that's interesting that we landed on the term earned wage access. I I liked the term on demand pay. I kind of liked that one. It didn't really catch. It ended up being EWA, and that's interesting too. Maybe we can get into that, and I'll just share
Yeah.
with the audience. We have sort of there's a working title for this podcast episode. It'll probably be different when it comes out, but right now it's Beyond Early Pay: How Free Real-Time Wages Are Redefining Financial Wellness and Retention,
Mhm.
which certainly is not a bad title at all, and it really kind of captures what we're talking about. Um, there's a new generation of EWA solutions
Yeah.
right now, shifting from fee-based stopgaps to, more employee-centric financial tools, that kind of stuff. And I know there's been some a lifting of some regulatory rules, or a change in interpretation, I think, at the
Mhm.
highest level around this. It's enabling some of it, and hopefully, if we can get to some of that too. But I have my first question for you is this: How does your approach to earned wage access fundamentally differ from traditional fee-based models, like stream funds? And I know
Yeah.
your website is getstreamapp.com. Is that correct?
Correct. Yeah, we
Yeah.
we function under the Stream name from an employee perspective. The company itself is Streamfunds Inc. But it's very very interesting that you mentioned. We've landed on earned wage access. It used to be on demand pay. I think what has shifted, and as you kind of continue to see people come into the space, the whole idea is really empowerment of the employee, right? How do we provide them with the tools needed to be able to get out of the stopgaps that they see on a week to week basis. And I think that correlates a little bit back to what insights we were able to captivate that allowed us to differentiate, which is, you know, a lot of the times, and what makes earned wage access so powerful is it's not something that only occurs once. It's not something that occurs at infrequent times. A lot of the times is that when someone struggles with their financing, it's due to timing, and because of timing gaps, that typically happens paycheck to paycheck. It's more frequent is probably the best way to say it. And so a lot of the ideas behind these tools is how do we provide financial empowerment to those employees who typically run low on savings. Banks don't necessarily want to support them or provide them the tools needed to go from paycheck to paycheck because it's expensive, it's costly, it's just not within the model of their standardized infrastructure. And anybody who does try and provide support, it's typically landed on payday loans, overdraft protection, very expensive options that ultimately don't really solve the issue. It takes advantage of that issue. And so the thing that captivated, as kind of I mentioned previous, that brought us into the space originally was there is a lot of opportunity to reimagine banking for people who don't necessarily have emergency funds or have savings readily available, and the banking industry isn't set up to focus on how they look at their finances, right? How do you look and budget against this timing issue ultimately? And so when we look at it from other earned wage access perspectives, right, there's really two buckets. It's you are either a consumer app such as Dave or Chime or Earnin, or you are working directly with the employer such as Bridget and uh, a few others, I'll say,
Mhm.
One Pay and such. Where we came in is we kind of came in the middle. And the idea here was how do we build what would typically be the cheap, affordable, almost universally accessible option from the employer, direct partnership option, while also still providing access to nearly any employee without the limitation of having to work with an employer. And it allowed us to build the system that effectively gave us, uh, you know, access to any employee to have this type of financial wellness benefits, while also providing it at the cost of what is effectively free, if as if an employer sponsored it. And so the way that stream looks like is, if you're an employee, you can sign up. Your employer doesn't necessarily need to partner with us. And the real benefit there is, for an employee, for this to be a financial wellness benefit that sticks, we can move with them wherever they go. But what we can do
Mm,
is, if we work with the employer, we can emphasize added benefits, added tools that allows us to either reduce the cost or also just provide it extra capabilities, higher access to pay that they otherwise might not get if they were not working with an employer. A good analogy to that is like healthcare. Healthcare
mhm.
is accessible to nearly anybody on the open market, but if you work with an employer, right, there's added benefits of getting healthcare through an employer. And so it kind of works in that same model.
So I just want to make sure, because this is super fascinating. So in other words, um, just tell me if I'm running a field here, a field here, if I'm totally off. But from what I understand, this is a tool for the employee. It's not necessarily the employer can offer it to the employee, but the employee could go and get this tool him or herself,
Yep.
and then just kind of it rides with them through, my employer now and then my next employer, whatever, and it enables them to get their earned wage access, right? So to get their wages whenever they want, no matter who
Yep.
they work for.
Yes, and to be transparent, at first glance, it might seem counterintuitive of, why would I do that? Where's the added benefit? But as an employer, what we found is you're adding extra benefits, right? As opposed to retracting benefits away from the employee. And so what we're able to do as we kind of follow the employee across their working journey is, we're actually able to emphasize the benefits that an employer provides. Kind of to take this from a different perspective, um, an employee can access this. We don't end their financial journey and say, "Hey, you're cut off from access to pay, the one thing that you need." Right? That's a very difficult and detrimental thing to their finances if we were to just do that. Which, unfortunately, working with a direct to employer partner is kind of the end of that relationship. But
Mm.
we're able to carry that along with them and emphasize specific employer partners that allows added benefits. It's almost, even if you take it from the Amazon perspective, you can shop on Amazon, you may not get next day shipping, but if you pay for Amazon Prime, you get all these added benefits, including same hour shipping. And that's kind of the same idea with Stream. You have the benefits of being able to access pay from employers. If your employer, though, is a direct partner, we can add extra benefits, such as allowing you to access more of your pay faster, or get 2-day early pay access to any of your banks, or even repay your pay access early, which otherwise you would have to bank with that specific bank to get. So it's a lot of added features that we've enabled our users to who live paycheck to paycheck to receive. And we believe that those added benefits you would otherwise have to, pay extra for. And so this is kind of like getting a $500 bonus without actually having to pay anything from an employer perspective.
Yeah, yeah, yeah. We don't have enough time in this particular episode to get into a deep dive of this, but I'd love to have a conversation with you sometime, Tom, around the mechanics of
Yeah.
how this is able to be like an employee's app, essentially,
Yeah.
and that they can get their pay whenever they want from whatever employer they're working for. That to me is, um, um, what is this sorcery is what I'm thinking. But at the same time, obviously it exists, and this is really, really a game changer. Let's get into sort of, I guess, the theoretical or the philosophical, maybe, that those are probably lofty words here, but what makes EWA a compelling retention and financial wellness tool for employers today? What is in it for employers to make sure that their employees get paid when they need, whenever they need to, as opposed to the regular payroll cadence? Like, what's in it for
Yeah.
employers?
It's a great question. I think it's really cute, especially at this moment in time in life.
Mhm.
Inflation continues to rise. Everyday expenses just continue to escalate, and for most people, at a basic level, this solves a real frequent point. Right. This is not something that maybe they'll check out once in a while. They'll go and visit, their portal for the benefits every so often. This is something that brings them pretty consistently back, and it's something that there is very taboo historically to talk about, but it's also something that is very necessary and only continues to be something that is absolutely necessary from the employee standpoint. Pay does not keep up with inflation. Inflation continues to outpace pay
Mhm.
growth for most people. And so this becomes a real struggle. And it's not something that just happens once a year, it happens every pay cycle. And so a good way from an employer standpoint to think about it is it's a zero cost benefit that competes with the similarities of giving a $500 raise in terms of financial relief, right? It provides real retention ROI for the employers. It provides frontline workers the money that they need at the times that they need, as opposed to going to costly alternatives and,
Yeah.
and detrimental alternatives as well. And so we
Yeah.
see this being a very useful and meaningful retention tool. It's something that is now becoming very fundamental in most HR toolkits. We're seeing that this is equivalent to 401k matching. It's not just a perk, but it's a baseline expectation for most frontline workers
I
nowadays.
Well, the other thing is it's an attraction tool, right?
Yeah,
Because the younger generations, like the younger millennials, and certainly generation, I think it's Z, right?
yeah,
And then we have Generation Alpha, which is coming up through the ranks. Some of them are finally getting their workers permits to wash dishes at age 14 or whatever it is, right? That's
yeah,
what I did. But in any event, right? I would have loved to get my pay whenever I needed it too, back then. Um, but but it's interesting. They've grown up. These are digital natives, right?
yeah,
The older millennials and Gen X, we all kind of, we know what it like was before tech and after tech, right? And so and there's a lot of holdover legacy, sort of just conventions, legacy cultural stuff that just persisted. And one of them was the biweekly payroll
yeah,
processing cadence, right? And I was joking with somebody recently. We're talking about EWA, and I said, I don't know. I didn't even think about it. I was like, oh yeah, I get paid every 2 weeks. Didn't even occur to me that, hey, why can't I ask these guys to pay me, mid-cycle, because I got to pay this bill, and it's always weird for me because I'm always blown through my cash by the time this thing is due, and I'm always paying it, almost 30 days later, whatever, and it's
definitely.
just, I know it's me, it's my fault, but it never even would occur to me to say,
Yeah,
hey, to my employer, hey, pay me, pay me this now. And but with the younger folks in the workplace, the fact that they can't do that, well, they can now because it's
yeah,
becoming more
yeah,
pervasive. But I'd say maybe 5 years ago or so, when it was like not really this thing, I can't imagine. They probably think, what the hell is going on here? Why can't I just get my pay when I need it? What is up with this? It's so weird. I mean, I can go onto Google Play and download an app whenever I need it, and
yeah,
go to my bank account and check it online whenever I want. Why can't I get paid when I need to?
right.
So
Yeah.
there's like a cultural thing going on there too.
Yeah, and I mean, it is very structural, and it's something that kind of seen now at this point at multitude of companies. And you're hitting on a really key aspect, which is a lot of expectations for younger generations is I can access anything immediately. Why is my pay not like that, right? Why
Yeah.
is it that I can get dopamine gratification by going on Instagram and I can order a burrito off of DoorDash, but I'm not able to access my pay at the same rate of time? And at the same time, credit becomes a lot more difficult to come by for newer generations. And so what we've seen is that a lot of that mentality has shifted financially, not just how people spend and how they expect things, but also the way that they approach it. And so to give buy now, pay later has become extremely popular, not because of the fact that you can finance most anything. You could have always financed almost most anything. That's a credit card. But what has shifted is there's more transparency of what that financing looks like. You know when to expect to pay it, how those blocks of times come by, what you get on the outside of it. And so the same kind of perspective shifted how people budget, right? When you look at your bank account, for most people who are growing off of buy now, pay later and debit cards, you're budgeting it off purely off of what's in your checking account. You know, you maybe have some margin of error because of overdraft protection or whatever it is, but that is your baseline budget at the end of the day. And so you want to make sure that you always have zero or near $0 in that bank account. And so earned wage access has only become a bigger part of how people look at their finances, because now that's what feels natural, as opposed to waiting 2 weeks, budgeting out on a month-long basis, and so on and so forth. And so, yeah, it's reducing financial stress. It's improving retention for employers. And then the hope here is that when it's done right, early pay provides smarter budgeting, which ultimately provides more emergency flexibility. And we're talking about providing financial flexibility for people who otherwise think and look at their finances very differently.
Yeah. It's really, really interesting stuff. Um, you mentioned the dopamine hit, right? And there's a lot of research around social media and smartphones and the dopamine hit and how it's not necessarily a great thing, right? We're
Yeah,
getting too many dopamine hits, but at the
yeah,
same time, every time you get paid, it's a dopamine hit, right?
true.
And and it's really tough to wait 2 weeks every time for that particular dope. That's probably the most difficult dopamine hit to wait for. Um,
Right.
so,
It's very true. Yeah.
yeah, it is. It is. This has just been an absolutely fascinating conversation, Tom. And I want to thank you for joining me for this episode of the podcast.
Of course. Thank you for having me.
Thanks for tuning in to the Future of Workforce Management and Payroll Insights by HR.com. We hope today's episode brought you valuable insights and fresh perspectives on the future of payroll and workforce management. Be sure to check out more episodes and explore resources at HR.com/podcast or wherever you listen to podcasts. Until next time, keep innovating and making a difference in the world of payroll and workforce management.